occurring over here. As a matter of fact, we're going
So
back
we
to
have
the market profile because
NFP
this
data.
illustration is just so
NFP
important.
data looks
So bear
like
with me as we
this.
switch screens back over here.
Very good number.
And of course, we have to bring up the market profile tab. There we go. If we take a look at the ES in the after hours session, the after hours session is this profile right here. I want you to make note of where the volume.
This guy in a second. There will be a lot of. There will be big possibility to hike rates up with this number. So that's what we're seeing. I'm already long because I just bought the bottom somewhere here. I sold 2. I add 2. I'm running 5 right now, so I'm just gonna hold this for a while and see how far we're gonna go. Let's listen to this guy.
Is transacting. Ignore the fact that the TPO profile is not showing the proper letters. But if I zoom in on this, right, we're talking about as this breakdown unfolds from the NFP release. Let me zoom way in on this so nobody's confused about the data. We're talking about double digits, 65 contracts, 85 contracts, 52 contracts, 70 contracts, 32 contracts, 19 contracts. I mean, there is no volume to the upside. So if you want to talk about where the skew is, net long or net short, all you have to do is look at a volume distribution of where ultimately things unfolded post NFP report, and everybody's short on the lows now. Everybody is short on the lows. So another reason why I would be a believer that yes, the overnight inventory is skewed net short. Very important to understand, because if we do start to rotate higher, these shorts with terrible trade location are the first ones to get burnt, okay? So let's go back on over to our price chart. Everybody's a little bit more comfortable with this one, yeah? So let's continue over here. The 3 questions tell us that, okay, if gap rules are in play and we're looking for the resolution of the prior low of day, then ultimately a couple of things can happen here. The risk reward is, well, again, there's too much volatility still surrounding this NFP, and we're 12 minutes post-release, so still trying to determine whether or not we'll open in or out of range. But for the most part, I don't think that there's good risk reward here for a fade of the gap. The gap is, first of all, not large enough. Maybe if we open here, that's about a 5-point fade. Your risk is also about 5 points to the overnight low. So the risk reward is not favorable for a fade at this point in time. And whenever that's the case, we're just looking for the resolution of your prior low.
143.
What that leaves us with, based on what we just saw over on the ES volume distribution, right, is that if a majority of traders are interacting down here, if all the volume is skewed to this area, all it will take is a higher low back within range, and then I think this is where you get a knee-jerk reaction back in the upward direction to screw all of the shorts who initiated at the bottom of the overall move. So in terms of talking about path, let's go ahead and do that now, and let's see what we have on the docket. So prevailing winds would tend to have me think that, okay, we're looking for some sort of breakdown here, lower high, and then continuation to the downside. That would agree most with the higher time frame takes that we just had on the 4-hour chart, the hourly chart, and the repair of the poor low that we were discussing as well. All right, so this to me is a primary outcome if the market is going to continue in the downward direction. Remember also that you have, if you think about the dynamic of who's feeling happy and who's feeling sad. So there's our smiley, here is our frown, right? Any longs who initiated at the very bottom of yesterday's low of day were feeling very confident headed into this morning's open, given the overnight session, given the close of yesterday's session. So longs were getting happy and shorts were feeling not so happy. That dynamic has completely reversed. This is completely reversed as we head into the open because of now where we're opening. Any shorts from down here are like, okay, a big sigh of relief. Oh my God, thank goodness, right? We're back to break even, possibly profitable. And longs are like, oh my God, we are, we gave up all of this profit. What's going on with the NFP? Why is the market sliding lower? I thought the bottom was in. Right? So overall, I think that the dynamic between the psychology of buyers and sellers here favors more so the capitulation from buyers and sellers stepping up on a breakdown of the bottom of the overall range. 42.50. If you want a line in the sand for today, a lower high underneath 42.50 is your area. Why is that the area? Let me remind you one last time on the hourly chart. I think that the hourly chart actually will suffice for going through all of the situations and pathing for this morning's open, right? 4250, it's right here. 4250 is right there. If we break down from that with a lower high underneath, we know that it's game over. This range is breaking down, and we're also repairing this poor low and this poor low. They were too precise. Too precise. We know that this is an inside bar. We know that this is an inside bar. So we're breaking down from a range on a lower high underneath 4250, and that, of course, would align most with the overall thesis that markets remain weak as of right now. Okay? What would the contrary situation be? The counter trend situation be? That would be a look below and fail on the range. So if I just clear this up, let me go ahead and make this front and center. I know we've got the 400-inch projector. It's the top of the line, state-of-the-art LCD projector. So don't worry, I'm sure you can see it, but I just want to make this as accessible as possible. So situation number one is that we sort of resolve the prior low of day to the downside, go lower high underneath the range, and then we're going to start to target this level down here at 42.25. 42.25, 25 points of downside activity to be trading for on this morning's open if this is the situation. Again, the ideal place to initiate that short would be on the lower high underneath the bottom of balance. Situation number two is that we sort of try to resolve this lower. We make a low, but then come back into the previous range with a higher low above for some sort of rotation back to the upside. And you guys better believe that that is look below and fail. Right? Look below and fail means that we repair this low, we break the bottom of the balance, we do not find any acceptance from new money sellers. If we can get, again, this is the caveat for the upside, right? If we can get a higher low back within range, that would be an indication that we should probably go back up and retest the top of the balance, right? The reason that this is a lower probability outcome in my eyes is because of exactly what happened yesterday. Yesterday is an example of that, right? We sell lower, and that was making total sense with everything that we did coming into the Thursday session. The fact that we rallied into the close was the wrench in the mix, right? That threw the wrench in the mix. So this look below and fail ultimately tried to happen yesterday where the sellers were unable to get continuation in the downward direction. They get one more shot at it this morning, and I think that they're likely going to be successful given the dynamic between, again, thinking about longs who are initially happy over here into this morning's open ahead of NFP. Now they're like, oh my goodness, what the heck is going on? Once again, my thought process from a psychological perspective is that longs will have the burden of potentially closing out, adding selling pressure to this market on the open. Okay, so those are the two paths that I would be mostly concerned with on this morning's open. I'm not even going to go in with a path number 3 today. I think that the game plan is extremely straightforward and will all revolve around 4250. Do we resolve it higher or do we resolve it lower? It's the bottom of this overall 3-day balance range. Inside bars, NFP clearly was a nail in the coffin. So if I had to prescribe odds, once again, we're talking about 60%. 60% odds based on psychology as well as trade location for a downside break. And then if we had to prescribe odds up here, as we know, the remaining 40% go for the upside. Market internals will be paramount in terms of determining whether or not you want to be overly aggressive with the rotation all the way to the top of the range. I don't really foresee that as again, all the way to the top seems a bit aggressive, retracing all of the NFP breakdown. Let's just quickly take a look at the internals from yesterday. I want to illustrate that even on the rally into the afternoon session, the internals did not perk up. We hardly got back to parity in terms of breadth. We were at the zero line. The advanced decliner remained below the zero line, and the cumulative tick over here hardly made it back to the zero line as well. There was clearly stronger buying, if you even want to call it that, on a relative basis on the Wednesday session, okay? So new money buyers, not really here. Not really here. Once again, I think that this supports the idea that we clean up this low, we get some sort of break, and then maybe we reevaluate for the monthly higher low around that 42.25 level we just discussed, which is a target 25 points underneath our breakdown or lower high entry here. Okay, that.
We have to break.
Everybody clear on the ES? Let's move along. We are a little bit behind schedule. We had a guest appearance from Kenny G this morning.
And go back up.
I know he's probably down at his office at this point in time, but hopefully those who wanted to meet him were able to say hello. Those who wanted to get a little jab in, Hey, what am I going to
This
say?
is why I'm not adding more.
Spiders, cash ETF, what's going on over here?
Cautious
We
here.
certainly had the opportunity
So we
for a
might
higher
go
low.
down
Again,
here.
think about this logically. If you're a bull, you see this higher
So
low,
I want
you're
to be
feeling
able
pretty
to withstand
content
that move
with
to
the
the
overnight
downside.
consolidation that was nearer the upper bound of this as a balance range.
We'll see.
NFP comes out and all of a sudden you're underwater. You are underwater on your position if you had the best, right? It's not even like mediocre longs are now underwater and the best of the best are still hanging in there. If you had the best execution yesterday, if you nailed the low of day yesterday, this gap down instantly means that it doesn't matter if you're the best executor, you are underwater on your long position, even if you bottom ticked the move, which would have been at what? 421.17. 421.17. So good luck to you. Longs probably are the ones who have to capitulate here. We are not obviously holding on to this level at 422.50, and the danger zone is 420.50. That kind of rings a bell, right? 42.50 was the ES level. We have this very clear and obvious poor low. Once again, we talked about the unfinished business down there. We're gapping down through it as of right now, as I'm speaking to you. The one caveat to put alongside all of this is that we are moving into the lower bound of this week's expected move. How many times have we seen, ultimately, how many times have we seen the market in recent times with this spurt of volatility, especially to the downside? How many times have we seen a breach and close underneath the expected move? Quite a couple of times. As a matter of fact, I've been keeping track. It's been 3 weeks over the last 5. We've got a very impressive close outside of the expected move. So it's not all that unreasonable to think that if we do break underneath this balance area here, yeah, you might not want to overstay your welcome, but technically speaking, we can make a move outside of the expected move. This is not a firm structural level of support. It's just a suggestion.
Okay, so we just took the low.
Seeing risk, and this was based on last Friday's close. This is based on last Friday's
15
close.
contracts.
So that is what we've got going on over here. The next downside
And now it's just the waiting game.
16.75, and as we talked about on Wednesday, this is a major monthly target. I think we also talked about it on Thursday. Was it yesterday's pre-market show? Was it yesterday's pre-market show? If you don't have this level on your chart, then we're going to have to kick you out of the penthouse. I'm sorry. It's the rules. I don't make the rules. I just follow them. Okay. So if you don't have 416.75, I'm sorry. We're going to have security escort you down back to the lobby, and maybe we'll reconsider if you update your charts. But 416.75, big monthly battleground for the S&P. Where does this become bullish? Once again, only if this repairs the low and gets some sort of intraday higher low back within range. So let me be very clear about this. We will trade for a look below and fail. We will trade for a look below and fail, but only on higher lows back above 420.50 with extremely well-defined risk reward on the setup. We need to have something that comes underneath, comes back above, and produces either a 5-minute double bottom in here, inverted head and shoulders. It could be a very simple hammer candle. We need something that tells us instantly where the stop loss is going to go near the bottom of that range if we're recapturing for a look below and fail. So we will trade the upside move there, but just remember, you need good risk reward. If the market starts screaming to the upside in here, that'll be more difficult to actually execute on as an idea.
This can happen
higher low pullback over VWAP gets interesting.
So we got 5 more minutes.
But if we're pressed into this, it's very difficult to push your luck, so to speak, back in the midpoint of this balance range, right? This as a balance range here. So those are my 10 cents, 2 cents on the S&P. I know we're a little bit behind schedule this morning, so let's continue along and take a look at the NQ. What's going on with the NASDAQ 100 4-hour time frame chart, starting with our top-down analysis here. What's going on? Thinkorswim with the zoom. Giving me a little bit of a trouble here, Okay, so Thinkorswim not going to cooperate with that zoom tool, I suppose. What happens if I draw a level, undo it, and zoom in? Still not going to cooperate. Okay, so we know who's going to be on speed dial number 4. They are going to be getting a call after the stream. We're not gonna waste your time talking to them on stream. Kenny G's a guest appearance. We'll have a chat every now and then, but TOS support, no. We're not going to give them the time of day. I think that this chart is extremely clear. If I could make it look pretty for you, again, this is absolutely atrocious. We're going to have some stern conversations over there, but nonetheless, it depicts the point that, of course, higher time frame downtrend is very much alive and well, with lower highs, lower lows, and this as well is the equivalent of your ES balance.
Well, this is very, very bad position for shorts. You know,
NASDAQ side of things.
They're really down.
On the intraday charts, you would
If
notice
somebody's
that you
shorting
actually have a
here,
higher low and a lower
not
high
making
from
money,
over
you know.
here. So technically,
That's
a little
why
bit
this
of range
market needs to go
compression
up.
if you were to do something that looks like this. Let's see if this breaks down as bear flag, right? For all the pattern traders, that would be your very classic bear flag, bear pennant, whatever you want to call it. Let's take a look at the hourly time frame chart. Midnight Rider, if you want to leave the stream, I mean, you're welcome. Nobody's got you chained to the desk up here in the penthouse. If you don't like the humor, you're welcome to leave. As a matter of fact, security's already taken care of you. So thanks, but no thanks. Goodbye. Adios. Have a nice trading day. I hope you have nothing but success, but unfortunately, the penthouse life is not cut out for you. Let's continue. Let us continue, shall we?
Order submitted.
So here's the NQ balance area, right? There it is.
Order
Overall,
filled.
I think that our midpoint of the range is extremely well defined. Obviously, on the breakdown here this morning, you know, we're at the bottom end of the balance. We are breaking down through the midpoint. 14.8 is not holding as that key area of support, which of course puts us back down towards the lows, looking for some sort of breakdown. So very, very similar to what was going on over on the ES, but obviously the balance range is much larger than just 3 days. We're talking about a multi-week balance at this point in time. 2 weeks, 2.5-ish weeks of balanced sideways activity. Not a whole lot of anything impressive going on with the NASDAQ. So let's go down to the 15-minute chart and just make sure we understand our ups from downs over here. Of course, we've got to adjust the overnight low. That goes without saying.
Somebody bought at 46.
And we will adjust that to its rightful position. If we could get a click, thank you very much. There we go. And what do we see over here, right? So the three questions, very similar to the ES, much more of a gap down presenting itself on the NASDAQ side of things. So question number one, opening on a true gap down. Gap rules are in play. We will talk more explicitly about gap rules here in just a moment because of number two, which is that we're opening closer to the overnight low as compared to, I mean, obviously the overnight high, but even closer to the prior low of day. So bearish indication, but as we know, sets a better risk reward for a move back in the upward direction, a fade. And then question number three, last but certainly not least, again, with the amount of volume that's transacting here on the drawdown, and as we saw over on the ES, all the volume is being transacted down here at the lows. You know, it's pretty fair to say that we're edging towards almost 100% net short here in the overnight. Maybe like 99%. 99% net short. So with that said, we clearly have a decent setup for a fade over on the NQ,
Order
more so than the
submitted.
ES. The other thing to point out is that the NQ is gapping down into the bottom of its balance range.
sure there will
It's
be
not
resistance.
technically gapping underneath the bottom of its balance range. So what that means is even if we do see a little bit of a move lower, I would be willing to entertain ideas
my
over
entries
the
are
high of day or the
somewhere
opening print if it's just an opening drive
think-
lower, right?
I think I have
that
one entry here.
recaptures opening print
here and
for a
here.
fade of the gap. Now, in this situation, you cannot afford to put your stop here, enter here, and retarget this. Ultimately, what you've done is just take a one-to-one risk-reward setup. That's no good. So if you're aiming for that, just reconsider, you know, what you're ultimately looking for out of the charts. Ideally, if you enter here after a higher low pullback above the overnight low, your stop would go here, and now you can clearly see the difference between this trade and the one we originally outlined, something like a 2-to-1, maybe depending on how quick draw McGraw you are, you could pick off something like a 3-to-1, all right? So that's what I would watch for on the NQ. Okay, is there the possibility for a fade of the gap? It's possible, but just make sure you have better risk reward here close to the overnight low with a stop. The bottom of the balance range can act as support. The line in the sand is going to be around 14.6. If we're getting lower highs underneath 14.6, as a matter of fact, let me actually be a little bit more precise with the bottom of the balance range. I just want to make sure I'm giving you guys the right number. So this is, again, these are the perks of coming out to the show and suffering through, apparently, my terrible humor. Yeah, the true level is 14,620. I'd use 14,620. So 20 points higher than the 14.6 round number. That's the exact low of Wednesday of last week. But ultimately, the true number to use is at 14,620. 14,620. If you're underneath that, I think you're breaking this balance range to the downside. If you are trading above it, I think that you have the opportunity for the bottom of balance to hold, and once again, that gap to potentially fade. So if we just go back down to the 15-minute time frame chart, I'll throw back on the extended hours. We can talk about some pathing over here. Let's begin. What do we see over yonder? So opening drive that's lower but holds on to 14,620
As we go
as we
through
just
the
discussed.
volume.
Higher lows back over the overnight low, looking for a long
Move
here
low.
with very tight risk
So
to
let's
fade the
hope.
gap, close the gap. Then really it really boils down to what's the reaction at the prior low of day. Do we get a rollover there for a gap fill reversal, or do we start to accept back within the previous day's range? So the path is really a little bit convoluted here this morning. I would love to trade so as a primary path, let's begin with just white. A little sort of opening dance that could last 5, 15 minutes, whatever. Higher low, or I shouldn't say higher low, but equal low towards the bottom of balance at 14,620. And then ideally looking for a long that gets us here. That's the primary path that I would look for on this morning's open. And then from here, we have a couple of different offshoots. Offshoot number one, which would be the most favorable with the conditions of the broad market currently, would be some sort of lower high up against the prior low of day. So this would become path number two.
But
and then beyond
got a
that,
decent
right,
volume
the
here.
even less
It
favorable
does a decent
path would be some
delta.
sort
I
of
think there will be a
continuation into the
secondary
prior day's
push.
range, higher low above. Then you're looking for longs here
Let's see
to
if they're gonna
probably
take that
retarget the big important level
20
at
moving
14.8.
average.
So I would see
Once
that
we
as sort
jump
of path
over,
number
we
3.
should fly to
All right,
60.
so that's kind of how I could foresee the NQ opening up on this morning's
Sometimes
open.
you just
1, 2,
need to
and
risk
3,
a little bit
and you
more
can see that this is
if you
where
wanna make
things and
money.
the decision really needs to be made at the prior low of day, right? So that's what I would see there. If we do just get consolidation underneath the overnight low, remember that the only reason to fade the gap is number one, if we are back above, so the overnight low has failed, failure of the overnight low. And then number two is that you have reclaimed the opening print. Those are the two conditions that must be met. There's no ifs,
Well,
ands,
that's
or
the
buts
pattern.
about it. Those two
Drop,
conditions must be
first
met
try,
if you're going to try to
drop
fade this
lower,
gap here. All right,
like
and then
10
beyond
with
that, this is
liquidity,
where things start to open up. But if
building
we don't
up
reclaim
and
the
push up.
overnight low, if we just
They should
consolidate
push
down here
higher
on a
and
low of day,
keep
a
climbing up and
breakdown
up.
of 14,620.
That's what
Remember,
they
I'm just going to put
should
this down
do.
here, right? 14,620. That's your all-important level. If we break that, the bottom of the balance is giving out,
somewhere
and we
here,
will look
and
for
then
lower.
try to
We
push
will
higher.
look for lower, okay? So that would be like, I guess that would also be an alternate
Well, that's
to
going to be
a
10
number 2.
points from here
Right, that
to
would be a
there.
number
That's
2,
going to be 10
certainly
points.
tradable on this morning's open. Once again, if you put yourself in the shoes of the buyers and the sellers, buyers who interacted at the low of day from yesterday, even those with the best possible trade location, they're underwater this morning. They're underwater. So more so in an excuse to add selling pressure to the market as opposed to buying pressure. All right. If we clear that up, I just want to show you where the next downside target is. Do we even have it mapped? No, we do not. How irresponsible on a Friday. Let's jump back up to the hourly time frame chart. Let's search for that target together, shall we? Yeah, nothing mapped out there. So let's really grab some more time. I think 90 days will actually do it. If we could get this to cooperate. Going way back,
So we have
no,
a full
90 days
hour,
will not do it.
2
Okay.
o'clock, 2:03
So let's
at
jump
the
to
moment.
180 days. Let's see what we got. Let us
And
see what we
delta's
got.
pushing.
Going all the way
That's what I
back.
wanna
All
see.
the way back. Okay, this is in fact the
And a bit
danger
of
zone.
green here on
This is
time and
incredibly
sales.
important. So once again, if you've put up with the crappy
Got
humor
some,
thus
we're
far,
building some
if
volume.
you
We
can
just
stand
broke
the Ken
20
Griffin
moving
jokes,
average for the
then
second time.
what's going on over here?
I should
Right?
get a
Look at
push
this. This is the beginning of the AI Mania breakout. Does anybody remember this, right? This is where things really went quite wild. And although we don't have it mapped out, I can bet you with almost all of my net worth, even
But we need to
leverage, I'll
break
take
that
out a couple of loans
low.
against some real
This
estate
is the low
assets. And I'll
from
bet you everything I've got that we have
4th of
single print
October.
thin structure over on the market profile here. All right, and what that means is that if we break down aggressively underneath that
Today is 6th of
14,620,
October.
there's nothing saving us until we get back down to this level, closer to 14,337.
So
Call it
let's see.
14,340. 14,340. A very, very aggressive break. We're talking about more than 200 points lower in the NASDAQ. Okay, so I'm going to extend this off to the right. I know you can't see what's going on the pop-up window right now, but bear with me as I just extend to the end of October. There we go. And now we'll just go back to that 15-minute chart. So you can see the magnitude. I want to really illustrate the magnitude of this move lower, right? Look at this. This is the range that we're talking about here, okay? And not for nothing, but what do the balance rules usually tell us? Let's go back to the hourly. And what would the balance rules tell us about the projected move? What's the forecasted move from any balance range break? If you've been around the channel for any period of time, everybody with an executive suite up here in the penthouse should know the answer to this. We're always looking for a range
It is
double.
failing.
Is that a
That's not
coincidence?
good.
I think not. I think not.
Well, let's see if they're going to pick
so
it
I don't
up.
want to be doomsdayer, doom and gloom. Market's going to zero. The Nasdaq's going to trade at
I do think they're gonna
$1.
pick it up.
But if we get a lower high underneath that
That's from
14,620,
the top.
the door is open for
It's
lower.
300.
Let's take a look at the
This is
QQQ
50
cash
points.
ETF and see
Market
what's going on over here.
needs to bounce back
This is
here.
not opening as close to the lower bound of this week's
Ideal
expected move.
situation
Let's
if
just
it's
skew
going
this
to
back a little bit
bounce
so we can see the hourly with a bit more
50%.
precision. And what's the intended open? So
This is
354.50,
RTH. That's the current
354.50
situation. This is where the price
puts
is
us right
at the
around
moment.
in here. All right,
So
so definitely a true gap down. But again, if this is a
60,
balance range,
it's
we're
possible.
not quite
We've been
all the way
60 we
interacting
had
at that
60 before,
352.
so
We've got some
that's
downside to
really
go
possible.
to get us there in the first place. So the saving grace is that if the QQQ cash comes into 352, finds buyers, does a little dance down here and holds into the Friday afternoon session, we probably don't break the balance overall. We probably do not break the balance as a whole. Okay, and also, again, in terms of expected move, we're not all the way at that lower bound. All right. The larger concern would be that if the NQ or the cash ETF QQQ over
They are still selling.
here, if it gets a big opening drive lower from the gap down on momentum for a lower high underneath, that starts to become certainly a big time threat. I mean, look back over here. This is when we had FOMC as a catalyst. So if we're talking about average true range, ATR, of the Qs, this is a bit of a stretch of the imagination. I mean, the probabilities would not suggest that we're going to 346.85 on today's session,
25
given
minutes
the
to
average
open.
available range of the
I
NASDAQ
think they
over here in
should
the
drive
cash
this
ETF side, okay?
higher.
So we're still paying attention to 352. I
So
think
they
it's a
can
big
open a high
inflection point
and
for the
start
markets.
selling again.
But do we just flush it and capitulate into 346.85 this morning? It would seem as though it's lower odds. Remember that the market can always do whatever it wants to do, but in terms of probabilities, I would tend to think that that's a lower probability outcome for this morning. Okay, we're still technically within the overall balance. All right.
Okay, so we are
Underneath
fighting the
346.85 is where the
people
danger
action.
zone really starts to come in on the QQQ
That's
cash
why.
ETF. Remember that there are some disjoints between what's going
plus,
on
obviously,
in the NASDAQ
bottom.
futures and the QQQ cash ETF side of things.
But
That's just the nature
they
of
should
the
be
game.
able to take
All right,
it
one of the things we were
soon.
talking about very early on in the NASDAQ analysis was this as compression. Right, so compression, we're
we
breaking
go.
this, right? Because technically we're opening here. We're breaking this to the downside. The intended target
And now
should be
push.
to, quote, fill up the triangle, which would be this move over here. Anybody who graduated 8th grade geometry class, please inform me what type of triangle that is. I know it's a right triangle, but what's the deal when you've got
Take
all three
5.
sides of different lengths? I can't recall it for the life of me. I promise you, I did graduate 8th grade geometry, but man, that one's, you know, I'm blanking out on that one. So a triangle with 3 different lengths
Can you
on all
open?
sides. Let me know. It's isosceles, obscure, obtuse? Yeah. I mean, hypotenuse. Yeah, we're talking about all sorts of things. I'm sure someone out there is going to break out the Pythagorean theorem. That one I do remember, just for the sake of, you know, a squared, b squared equals c squared. Right?
Okay.
That's a classic.
So
But
we
anyhow,
got the
let's move
push.
along. Let's talk about the Russell futures here. The
Okay,
goal
we're
will be
gonna
to wrap
close
up the
10
broad
here.
market here by 9:10,
We're
and we're
already
doing fine from
700
that perspective.
up.
We've got 9:07 on the clock. Let's take a look at the 4-hour time frame chart over on the Russell
Q.
futures
Order
here.
filled.
Just as a
I'm gonna
general
write this
reminder,
5.
because it's Scalene, Rebecca F. Thank you
We're
so
gonna
much. I just saw that one
write
pop up in
that
the chat,
5.
and my goodness, Scalene, what a word, huh? What a word. That one might be the word of the day.
So stop market.
Order submitted.
Anyhow, the Russell, just as a general
We're gonna
reminder,
write this
because
5.
I know some
We're
folks
gonna
were
be
complaining about the bad
closing
humor
1
this
by
morning.
1.
Russell,
No,
check out your
definitely need to
keyboard.
close
RT and
somewhere
Y are
here.
all next to each other on the keyboard. It's just, it's a fact. Again, I don't make the rules. I
I
just
should
follow them,
close the
but
whole
that's the
thing.
beauty about small caps here. Your daily reminder, weekly reminder maybe.
Let's see.
So what's going on over here? Certainly a
There
4-hour
will be a
balance
dip
happening at the lows. Can't
once
get out
we
of its
hit
own
this,
way. We had hammer time, which was set to begin
50
up and
moving
over the hammer
average.
highs
That'll be-
from the
they're gonna
Tuesday
dip.
Wednesday and Thursday session. Thursday was an inside hammer as well. And with the
Yeah.
NFP report, I mean,
They are
I think we've seen
struggling
it
close.
often. We're not opening near
Right.
that hammer high breakout any
900.
longer. So that is kind of off the table as a primary
84,
situation. But notice
980.
that IWM, if we just take a look at, we'll
Good
go to the
market.
15, we'll skip down to
NFP.
15.
Thank you very much.
There's a stronger move back into the previous day's range, not as aggressive on the breakdown here, and certainly not threatening the low from over here. So much more balanced, a little bit more tame, if you will, over on the small caps. The